Hello, I'm David Lin, Head of Investment Research at Altair Advisors. Today, I would like to share with you some of the key takeaways from our latest Altair Insight Quarterly Commentary, which covers a period with a strong bounce back for both U.S. and international markets. The AI boom is providing a tailwind for stocks, a big part of that push coming in the form of accelerating revenues and earnings. For the second quarter, S&P 500 earnings growth is estimated to be nearly 25% above the same quarter in 2025. Earnings growth for small cap stocks is expected to be closer to 50% year over year. So far, the actuals are beating the estimates. Of the S&P 500 companies that have already reported their results, more than 80% have reported higher than expected earnings and/or revenues. And looking ahead, the earnings growth story does not fade. For the final 2 quarters of 2026, earnings growth is estimated to be at least 25%. Large cap value stocks have had a much better year than growth stocks, and somewhat counterintuitively, a lot of the reason is related to the AI. A number of semiconductor, memory, and data storage companies in the value index rose 200% or more in the first half of the year because of AI data center demand. Some of them rose that much or more in 2025. This performance created a challenge for disciplined value managers who seek underpriced stocks. Those who did not own these high-flying companies were certain to underperform. We expect our recommended managers to stay true to their investment process, which means not adding unacceptable portfolio risk by chasing today's high performers. Inflation's peak so far this year is 4.2% in May, as higher energy prices rippled through the economy. June's rate was 3.5% as oil dropped, but we expect July to head up again given oil's rise due to recent Middle East fighting. The market expects the Federal Reserve to raise interest rates later this year to try to slow inflation down. But we think the Fed will keep rates steady. We believe the current fighting in Iran will not escalate and that oil will eventually trend back down. This would ease pressure on Fed Chair Warsh and other members of the Fed's rate-setting committee to impose hikes. We believe both the U.S. and Iran have more economic and political reasons to settle their differences via negotiations than to keep fighting. A peace deal will lead to a more predictable flow of oil and bring down inflation. Earnings growth will continue to drive stock performance, while consumer spending and the AI buildout will support economic growth amidst geopolitical uncertainties. You can find our full commentary on Altair's website. Thank you for watching.